Hi. You may have heard the term escrow from your real estate agent and be wondering, what does it mean? What is escrow? It's important to know what's happening in your transaction as you buy your home, and escrow is a term you'll want to know about. Hi, this is Richmond. I'm a senior mortgage advisor with Westcorp Mortgage Group, and in this video, I'm going to talk about escrow, what it is and how it works. So first of all, what is escrow? Escrow is a financial arrangement in your real estate transaction. Escrow is set up for a third party to hold and manage the payment of the funds required for two parties involved in the real estate transaction. Having a third party provides a more secure transaction by keeping the payment in a secure escrow account, which is only released when all of the terms of an agreement are met. Your escrow account is overseen by the escrow company. While the payment is in escrow, the transaction can be safely carried out without risk of losing money due to fraud. Escrow allows for secure transactions and confident buyers and sellers. So, how does escrow work? Escrow reduces the risk of fraud by acting as a trusted third party that collects, holds, and only disperses funds when both buyers and sellers are satisfied. Here's when you will be involved in your escrow account. When you make an offer on a home, you will write an earnest money check that will be placed in an escrow account. This is one of the first financial transactions in buying a home. What this means is that the money is not going to the seller or the lender. Instead, your money is held by an impartial third party until you and the seller negotiate a contract and close the deal. You can't touch the money, the seller can't touch the money. Your money is held in escrow. This is important, and it will really give you peace of mind because having your money held in escrow protects both parties. Escrow is important because let's say, for example, that you put down earnest money that went directly to the seller, and the seller had the money, and then for whatever reason, you and the seller don't reach a final purchase and sale agreement. Well, you certainly would not want the seller holding your earnest money as a negotiating tactic and possibly be at risk of losing it altogether. And on the other hand, the seller certainly would not want to sign over the deed to their home until you've paid for it for the terms that you both agreed on. You, of course, would not want to hand over your cash for the home without knowing that the deed has been signed over to you. So having an escrow account ensures everyone gets what they agree upon at essentially the same time. Now, the next time you're going to hear about your escrow account is when you're working with your mortgage lender. Escrow and your mortgage lender, what does that mean? As you near the end of getting your home loan, your mortgage lender may talk about an escrow or an impound account or reserves. Now, these terms all pretty much mean the same thing, so don't get confused. What they're asking you is if you would like to have funds held by the lender to make payments for your homeowner's insurance and your property taxes. Mortgage lenders often will offer you the option to collect these payments monthly along with your loan payment, and then the lender pays the tax and insurance bills when they're due. Some lenders may require you to have these payments placed into an impound account, depending on the loan program, meaning it might just be required that you have an impound account. If you set up an escrow or impound account with your lender, they include the amount of your homeowner's insurance and property taxes with your monthly housing payment, and they hold the money each month in the escrow account. When it comes time to pay these bills, the lender pays the bills for you out of the escrow account, which is such a relief. It's a smart way to do it. That way you don't have to worry about having the money required to pay these bills every year when they're due. The next time you're going to hear about your escrow account is when you are getting ready to close on your home. So where's escrow in the closing of your home? Well, when you're getting ready to sign your closing documents on the home you're buying, you'll probably hear the lender or realtor talk about the closing of escrow. The closing of escrow is when your purchase is completed. A closing or escrow officer will oversee your closing documents and handle the exchange of funds and recording of the deeds. They'll ensure all the money is properly dispersed, that the documents are signed and recorded, and that all the necessary conditions are met before closing the escrow. If you've negotiated something in your contract that will not be completed or that may impact your taking possession of your home, you may hear the term escrow holdback. So what is an escrow holdback? There are instances where the sale of a home is completed and ownership of the home is transferred, but the funds are still held back in your escrow account. An example of this would be, let's say you've agreed to let the seller's family stay in the house for an extra week until their new home is ready for them to move into. They would sign a rent back agreement requiring them to pay you a daily rate for the length of their stay. In this example, your real estate agent would advise you to hold back a portion of the seller's proceeds until they have moved out and left the house in the conditions specified in your contract. Another instance of an escrow holdback would be if you found something wrong during your final walkthrough of the house. Maybe the seller agreed to make a repair, but the work couldn't be completed by your closing date. In this example, that money could be held in your escrow account to cover the cost of the repairs. Once they're done, escrow releases that, then the transaction is done. So once escrow is closed and all funds have been dispersed, you and the seller will receive what's called a final closing statement. And it usually comes via email and snail mail. Now you're going to want to make sure to check the statement carefully and call the closing agent immediately if you spot any errors. And also be sure to file that statement in a safe spot with your other home loan documents, preferably on your hard drive so you won't lose it, because you're probably going to need them when you file your income tax return. Knowing the terms and steps in your real estate transaction is important. Be sure to get your questions answered along the way and make certain that you're working with licensed professionals. Thanks for watching. This is Lori Richmond with Westcorp Mortgage Group. I'd be happy to help you in any way I can. My contact information is below, so please do feel free to reach out. Thanks, guys.